the property residual market, pools, fair plans, beach and windstorm plans, assigned risk and others. A pool is an organization of insurance or reinsurance through which particular types of insurance coverage are provided. The pool acts as a single insuring entity and opposed to some jobs and assigned risk plans where the policyholder deals directly with an individual insurance company. Premiums, losses, and expenses are shared among pool members in agreed upon amounts. The range of activities handled by the pool varies. Some pool operations are limited of the redistributing premiums and losses, while others have broader functions similar to an insurance company. Some pools use specific insurers are serving carries in pools composed of primary companies with the pool by the agent. Pools may be mandated by state legislation or established on a voluntary basis. Pools assure that insurance is available property owners in high risk, generally urban or coastal areas and business with a poor safety record or other high risk characteristic. Among the best known primary pooling arrangements are property insurance plans such as a beach and wisdom plans which insure owners of property vulnerable to serve storm damage. Fair plans 32 states and the District of Columbia currently have property insurance plans known as FAIR, and a acronym for Fair Access of Insurance Requirements Plan. The concept of FAIR plans was established following passage by Congress of the Housing and Urban Development Act of 1968, a measure designed to address the conditions and led to the 1967 urban riots. This legislation made federal right insurance available of those states that instituted such property insurance pools. One of the plans, Arkansas Rural Risk Plan, was created in 1988 to provide a market for property insurance in rural areas where fire protection in poor or non-existent. Mississippi Rural Plan, which offered a fire extended coverage and vandalism sea blow, was expanded to cover the entire state in 2003. Georgia Fair's plan also provides windstorm and hail coverage in coastal counties, as do plans in and New York. In most states where fair plans are area in operation, they are mandatory. Beach and windstorm insurance plans counterparts are the fair plans are beach and wisdom insurance plans operated by property insurers in states along the Atlantic and Gulf Coast to ensure that insurance is available for both residents and commercial properties against damage from hurricanes and other windstorms. Established between 1969 and 1971, beach and windstorm plans operate in a manner similar of fair plans, except that properties must be located in designed area to be eligible for insurance under the plan. There are currently 5 beach and wisdom plans: Alabama, Mississippi, South Carolina, North Carolina, and Texas. In 2001, there were 7 pools by Florida Windstorm Pool merged with the Joint Underwriting Association in 2002 to create a new type of residual market entity, Ciblo. In a similar move in 2003, Louisiana merged its fair plan with its capital pool. The plans are mandatory in all of these states with the exception of Alabama. In addition, hail and windstorm coverage for homes in coastal counties is available through some fair plans. See above and the wind map in Never in New Jersey. Windstorm plans in Mississippi, South Carolina, and Texas offer only wind and hail coverage. Plans in Alabama and North Carolina offer coverage for fire as well. In some states, plan policyholder must buy flood Insurance also property owners who live in areas covered by beach and windstorm plans may be insured for windstorm losses by the plan or by an individual insurance company. If an insurer has accepted all the windstorm risk, it is prepared to assume an applicant or homeowner's insurance may purchase a policy that excludes windstorm coverage from the homeowner's insurance company and pay a separate premium for windstorm coverage to the plan. One disadvantage of beach and windstorm plans at the National Flood Insurance Program is that the availability of insurance encourages development of coastal areas where construction otherwise would not be visible and where tax money must be spent or protect against continuous erosion to preserve the property. In the past, there was a clear delineation between coastal and urban plans, with coastal properties insured under beach and windstorm plans and urban properties under fair plans. Increasingly, the distinction are blurring. Fair plans are acting as an insured of last resort for residents who live in shoreline communities in states that do not have a beach and windstorm plan, such as New York State. Beach and windstorm plans in some states are being merged with fair plans or joint underwriting association, as in Florida and Louisiana, or are administrating new fair plans as in Texas. As a result, it is difficult to compare the number of properties issued under any plan with numbers from earlier years. Fair plans have almost doubled in size, pushed up in large part by these mergers and the increase in coastal properties in such states as New York and Massachusetts, by also by more stringent underwriting standards on the part of insurance in the voluntary market.